You know where to find me. Also, my Discord channel, which I'll post in the YouTube session in just a moment. Let's jump into the charts and the markets. We're at 414. I think today is a bit of a toss-up as far as an intraday move down to 410, up to 420. We'll figure it out. We're going to see if I can hopefully see a little butterfly spread that pays pretty nicely today. I'm going to check on it actually. And let's have a look at, get logged in. One of these positions here. So far the week has been pretty solid. If I basically lose on every trade, that's $1.09, but I'm already up for the week. Trying to think here. I had two trades that weren't officially part of the group. That was a trade with Meta and Amazon. Each one was for about $1, like $1.20 credit, $1.20 and $1.50 credit. But again, I didn't take those trades with the group because they're a little bit more expensive. I took them on Monday, and it wasn't really an earnings play. So anyway, I didn't take those officially with my alert service. But if I just include this, I could be down $1.09 if I lose everything today on the butterflies, which is not a big deal. Down $1 from Microsoft, up 323, and then down 41. So I'm still, even if I lose on everything today, which is highly unlikely, I'm up 73 cents for the week per contract. But the reality is, one of these trades, like yesterday, I saw this one here, the 410. That was the sell put level on my butterfly spread. That was trading for up to like $1 yesterday. So there's 70 cents of extra profit. I'm trying to let these things run towards later in the day. If I could probably wait until like 1 or 2 p.m. Eastern time today, whatever area this is in, if I get this kind of butterfly spread correct, I should have about a 3 to 4 to even 5x return. If I wait until like 3 p.m. today, maybe it trades up to like 8 or 9x profit. So we'll figure it out. But that's what I'm assessing for the morning. Look at my levels. Let me log into my platform here. Oops, there it is. And get logged in here. And we'll take a look at the charts. So 414, looks like we had a small gap higher. Big histogram levels I'm seeing on my Ultimate Options platform, 410. I said that yesterday as well. 410, 411, 410 was really the projected move. We hit a low at 411.50. I mean, you can go back into my plenty of messages here in Discord where I talked about early in the week. Here's analysis. Today's YouTube session, 420, 410 major support zone. I posted this right here. I said that in the trading room, 410 to 400 is critical support. There's the yellow box measured to puts, move puts to the SPY around 412 to 410. The low of the week so far was 411.57. So, I mean, playing off of a weekly time frame, that's pretty accurate to basically, pin your support level within about 50 cents. So, pretty happy with that overall. I mean, thank the market for being obedient and technical, and that's what we try to do. If you want to join the Discord group, I'll post this right now. Let me log into YouTube and say hi to everybody. And then we'll get back to the charts.
At Mint Mobile, we like to do the...
Hey, Ryan Reynolds, what's up? Chris, good morning. Catherine, good morning. Joe, what's happening? David, good morning. Angela, Perry, Jacob, Jan, Don, what's happening, everybody? Good morning. Happy Friday. Good morning and happy Friday. All right, FK, good morning. Gary, good morning. Discord channel invite right here if anybody's interested. Best place to join is right here during the live session. I don't know why this, I clearly click on this and go link never expires, but every time I do that, if I'm not in a live session, I see that people, message me all the time on YouTube like, hey, your link's not working. I have literally taken this link and posted it many, many times. I don't know why it doesn't work, but I post it live and people jump right in. So now's the best time to do it. And I'll leave those comments as well. Okay. All right, let's get back to the clean chart here. We're at 413. Let's have a look at the SPY. I want to see what this is doing right now on my cash account. Go into my butterfly put spread. It's the 410 by 414 by 406. It's trading up over $1 right now. That's about a 70 cents profit on a 30-cent debit, so it's not too bad. to kind of lock things in, guarantee. I mean, that essentially covers all the trades for the week if I want to close it out today. If we do push a little bit lower, I mean, if I do nothing on this when it pushes down to, 413 even or 412, I think just to be safe and everyone that's with me in Equities on Demand or Delta Trader, I'm going to see if I can just close this up for a buck. Hopefully more. Let me see if I can get out for $1. If it doesn't take $1, I won't take the trade. So this would be a buy to close, sell to close, sell to close. Today's expiration 410, 414, 406. See if I can get out of here for $1. Actually, I'm just going to show you on this platform because this is where the trade is easier to read. And then we'll talk some other stuff. If it goes down a little bit as I'm trying to close this trade out, that'll be a good thing. Closer to that pin price is even better. So let me just bring up the trade positions. I also got assigned on LUV for Southwest Airlines. I will dump those shares for the small credit spread loss. Let's go down to SPY. So the 410 by 406 by 414 right here. If I close out this butterfly spread, see if I can get $1 for it. I'm going to go after a buck. See if it'll let me close it. And easy peasy lemon squeezy. Okay, so I just closed that for $1. That's good. So let's mark that. Let me update that in Telegram for the alert service. Right here, that was the. Let me see if I got filled at $1 or $1. I saw the mid go up a little bit. Probably filled me at a buck. Yep. Okay, so $1. Give me my decimals. There's $1. There's a win, and that's a 69-cent profit to add to the week. We still have 3 more. Somehow we have some crazy big rip to the upside. But for the most part, we are solid on the week, and I'm happy with that. And yeah, I mean, no complaints. So now the market can do whatever it wants. We have FOMC next week. I think that some simple short-term plays will be solid. We should have some good volatility. So I'm looking forward to that trading next week. Technically, we'll get into the charts here. I'm just trying to wrap up a couple of trades. So let me get this out for Telegram, Delta Trader, Trade Management Update, SPY. It was the 27th expiration. It was the 410 by 406 by 414. Butterfly put spread. Paid 31 cents debit. Closing now for $1 credit. So that's 69 cents profit per contract. And there it is. Okay. And if we see something short term that I like today, I mean, we're trading at 413. I think 410 is the big calling for the day, but I don't really see. I mean, I'm hovering over my my hedge levels and my gamma squeeze levels. I don't really see a bunch of option contracts out there. It seems to be pretty quiet volatility wise, and Amazon's kind of blowout earnings yesterday might keep a little bit of support in the market. So we'll see. I don't really feel like over trading for a Friday. We can just, if this is a loss, this is a loss, this is a loss, I'm still up pretty solid for the week. So I will take it. Okay. All right. Let's go to the charts. So I do have a chart alarm set at 410, 411. Let's take a look at oil, gold, silver, and the dollar. The dollar's down a little bit today, which is kind of nice to see. My euro dollar position still hanging in there at 106.50. This coming into next week's trading, I'm telling you, this is probably the easiest chart to read, because if we see the dollar dropping below 105.50 with basically the Fed's help, and I'm not saying the Fed has to say anything to make the dollar drop, but I think the Fed, just being the event that it is, we're going to start to see price action moving because of it. If the dollar is down here, post FOMC, that is a good sign for, I think, the broader markets to rip. Stock market's expecting to go higher. If the dollar's dropping, we might see gold and silver rip. We might see Bitcoin take off to the highs again. Bitcoin might be coming back to retest that 32,000 level. We're trading at 34. I mean, right now it looks like a big pause, right? So if it's just a nice solid pause, it could be a bull flag to head up. If we pull back sharper and hit, 31, 32,000, I would certainly like to see a bounce there, because if it pulls back into, say, 28, I don't love that at all. Um, in fact, I kind of hate that look if that's going to be what happens. So I would be watching. I mean, that breakout does seem pretty solid. Past resistance becomes support. I'm looking for higher highs in Bitcoin. If the dollar takes it on the face, great. Meaning like the market just pokes it right in the eyes. I want to see it. The dollar index right here. I like this setup. I mean, a broadening pattern looks pretty solid. I've we've talked about this pretty much from every angle in the trading rooms. If somehow the dollar is like ripping up here to the upside, I still want to fade the dollar with confirmation, not just throwing in entry orders, but fading with confirmation, because I think that we're moving back to the midpoint area. Um, honestly, what I would be eyeing is, I don't know if fresh lows are going to be the case, because the last time we came here on the DXY and we hit 100, that was the big turning point. So I could see the dollar heading back down to 100 and then seeing some support in there, and we just have more of a broadening pattern. And guess what? Guess what? If we have a broadening pattern like this and we have more indecision on the dollar, guess what happens in the stock market? Probably more indecision, right? So for everyone looking for like this crazy bull run or crazy bear run, we might not have it, right? And this is where traders are going to have to survive, because we're going to have highs and lows that we have to trade from. I just don't know if we're going to have a big sustained move. But I will say this, if there's direction to here, then I think going into something like the SPY or the Qs, which by the way, the Qs this week hit the corrective 200 EMA on the daily time frame, which is a big correction. It's about freaking time it hit there, because it was about a month earlier than the SPY. So we finally hit that with a sell-off this week. Okay. Now, I think this outlook is pretty simple. We've had a 10+% correction from high to low. The bears in here have kind of broken this area, so it doesn't look as kind of ascending wedge, bullish as I thought earlier, as the correction on the Qs were way slower than the SPY. But I'm still looking at this potential. If we have well, I have all these yellow boxes for pockets, but if I zoom backwards a little bit, you know, there's still room for the Qs to fall, but after a rally here, we're sitting at the 23%. So is the 23% able to get us back up to the highs again, or the 30% able to get us back to the highs again? Probability is that can certainly happen. And I'm just throwing it out there. If the dollar drops, the Qs and the SPY, I think, can rip aggressively back up towards this year's highs. Maybe not all-time highs, but this year's highs. And that'd be a great play. I mean, I would consider doing, maybe 1 week in staggered calls. We'll talk about that in the trading rooms, but it's like, if we can get a direction, I'll define my risk and I'll give myself some time to see if this thing wants to go. I mean, if this is 347 back up to 385 or 390, all I need to be doing is participating. Now, the cheapest way to do that would be a bunch of credit spreads, and we can do like week to week credit spreads and try to pin something pretty low. I mean, in fact, I don't mind talking about that today in class. We're trading at 347. I don't mind looking at, like a 345 by 344, just kind of staggering out some credit spreads. But again, it'd be silly to stagger out a bunch of risk and watch this thing drop. So maybe just having like one for the month of November, one for the month of December. If we go up this way, then we start adding more trades in with better confirmation. So I think that my biggest alignment right now is watching this stupid dollar index. Because if the dollar index cooperates, I think we have a fantastic rest of the year ahead. Meaning, like, we'll finally have a decent direction to trade with. I think, technically speaking, if I look at where my currencies are at, the Aussie dollar is just coiling down at these lows, and I think when we get a dollar that pushes lower, this thing can rip to the upside. The euro dollar is doing the same thing. We started to break recent trend lines. We're hanging on to this area. Now, this currently does not look great. I mean, watching the euro dollar come into this territory and then break this, I mean, this doesn't look good for the euro, right? Like this little move, little correction here. I mean, I could still see the euro dollar heading into previous lows, 104, 103. I've talked about this 100 level, parity essentially. I would still consider buying the euro off of parity. But for right now, I'm in at 106.50. And I think that we have the dollar able to come back and test an area like this. 108 to 109, I think that's possible. The euro dollar can rip to the upside a little bit on the dollar index. If the dollar index is down, the euro dollar is going to be the tightest correlation. So dollar index down, euro dollar should go up. Pound dollar. Pound dollar, a little bit less convincing. I'd almost rather see this on the pound dollar. If somehow this can set up like a falling wedge around this 120 handle, I'd like to see that as an area that we start looking to test, maybe trade it back to this previous support resistance around 125, 126. Okay, New Zealand dollar looks a lot like the Aussie dollar. It's coiled up pretty nicely, and hopefully we have a potential rip coming back to like 6,000. I'm sure the Bank of New Zealand's like, no, no, no. If if they had an exchange rate of one something, they would be intervening like crazy. Anyway, I think the New Zealand dollar can come back into like 6,000. And that's just like short-term stuff over the next maybe couple of months. Bigger picture wise, I'm still watching all this because bigger picture wise, we have this low, this high. I feel like the market and this current carry environment can operate a lot like this. We could have the Kiwi dollar head all the way back up here and then head all the way down and all the way back up here and all the way down, come back into these big lows, and then we're going to see what the market's made of for a bigger range trade. So the dollar might ignite some good moves in the near term, but structure wise, it might end up getting us into these larger ranges that we have to play. Okay, dollar CAD. Dollar CAD's trading at 38.48. This will not turn. I'm looking for the dollar CAD to hit like 39 and 1.40, and then I will start looking for turns. So if we have that type of move, we come back into equal highs. I will start looking for the dollar CAD to then give me some confirmation turning and see again if the dollar index starts to go lower, can the dollar CAD start to drop back down? If it can, middle of this range is around 135, bottom of this range is around 131. Ideally 3,000, but if I sell it up to 4,000, I'd be happy taking it back to 3,500. Just take the middle of the range. Pretty simple. Okay, dollar Swiss, we're trading at 90.13. Currency strength for the morning. Aussie's up, yen is up, Swiss is down. It's going to be a good day right there. I like seeing that Swiss on the weaker side. That's what we have positioned for my class portfolio builder. I'm going to log in and give a spot check really quickly for that. See how we're doing. Let's see here. Morning, David. Forex business. I mean, look, if people think that they can get all the information and all my trades in 30 minutes a week, then good luck. But I think that if you ask anybody in my trading room, we get to spend a lot of time together, and there's plenty more that we discuss. So, whatever. This is the community that I'm trying to build. If you like the free stuff, then join me here. It's not like I'm just gonna bottle it up and withhold it. So get on the Discord channel, join me on YouTube, and get your money's worth. Okay, I'm not sure why my dollar Swiss is being weird with the load. We go weekly time frame. Maybe it's just because I put that big fib on there. That is strange. Okay, anyway, so we pulled back. You turd. We pulled back to the 5.0. I'm looking at the 618. All right, let me log into Portfolio Builder. And see where we're at. But based on this, we should have a nice turn in P&L. Yesterday, I did a spot check on this for the class, and I was at a 563 pip drawdown. Now I'm at 269. That was yesterday, so I will look to see. If that's improved yet again. We actually might start carving out some profits today. We'll find out. If the balance is improved, that'd be awesome. So just log in and I'll check that in just a moment. Okay, so anyway, that's the DXY. I think I've beat that up a little bit, but does everybody understand? I mean, this is what I'm looking for. I mean, I've mentioned this in all my trading rooms. What we'll be doing is, following along with confirmation and being pretty darn aggressive. If this is going to be the direction I can trade for the next 2 months going into November, December, I will do everything in my power to take full advantage of it. So our trades and positions and equities on demand, Delta Trader, Flex, I mean, anything that reflects that will be all over it. Okay, so a little quick check here. I'm going to add this in Portfolio Builder. Right now, so pip wise, I should have a pretty decent. If I'm still in a drawdown, it should be minor now. So positive 13, plus 7, plus 4, minus 72, minus 90, plus 84, minus 107. So now I'm down 161. That's way better. Spot check, minus 161. Okay. Drawdown improved. Once again, Swiss is the weakest currency today. 10K balance. I'll just put balance. Balance is 10,037.37. And then floating P&L is 695.67. And do I have any new trades? I think I have all these break-evens memorized. 5,008, 65.97, 95.22, 109.42, 79. It's all the same. So all the trades are still the same. And then no new fills yet. Look for a video update later today. Okay, so handle that action for some class. Let's see if the Swiss will stay soft. That'll be great. Aussie on top, yen starting to make a move. Let's check the old dollar yen, how that garbage played out with that intervention candle. So is this a rising wedge? I mean, that was quite the fake out. Did anybody take this trade, by the way? I was curious. I had a lot of traders watching this with me the last couple of weeks since we had that intervention candle. Let me go down to a 1 hour chart. So we were looking at this. You know, if we started to see some short-term confirmation, and again, it would be a short-term sell here, right? There's your intervention, and we just came right back up to it, ran the highs yesterday, and then started to finally get some solid price action to the downside. So as far as the distance, it's not a huge move, but from that high yesterday to current price, it's down about 100 pips or so, 120 pips. I was just curious if anybody, you know, that finally got a decent entry on like the 5 or 15 minute time frame. So if not, no big deal. I hate how the JPY is behaving, but I know that there's just like undeniably good looking setups. I just don't have confirmation. You know, I mean, daily time frame here, looking to see if we have. Why are these charts are like loading like crap today? Something like this. You know, this is Euro Yen. This could be a fantastic looking rising wedge, but it's going to take time to figure this out. And, you know, the Japanese yen last year didn't start to move until late October, November. And when it started to move, it was a big rebalancing year, right? We had a crazy trend for 6 or 7 months, and then we had a ridiculous, you know, sell off and rebalancing for those like 50% pullbacks. So if the yen or BOJ is going to do the same type of thing, I'm curious to see if the price action plays out the same way. Pound yen again, very solid looking pattern. Left shoulder, head to neckline. Don't ignore this because again, it's worth taking a stab at. I hate the Japanese yen right now for how it's behaving, but if we get down here below the neckline, this trade could drop easily. At least the measured move of the head and shoulders, which would be here. So that high to low is 890 pips. So if we break the neckline, we go another 890 pips. There's plenty of opportunity there. That's all I'm saying. And Swiss yen turning the corner a little bit, right? Same type of thing. I thought this was a head and shoulders as well, but we broke the high. So this could be more, you know, down here, pull back again. But if we break the neckline, just there's measured moves all over the place, and we'll be looking to trade them. Okay. Any requests, any charts, anything you'd like to take a look at? Amazon overnight had really solid earnings. It's up to 127.86. I had a student email me asking about, you know, a strangle trade on Amazon. I said it would not be a good idea to take it just because the market's already moved for the week. My Amazon strangle I took on Monday was profitable that I closed it out before earnings. I don't even remember what the legs were on that trade, but I'm just curious. I'm going to find the email and find out. So Scott, if you're watching, I'm going to go back and see what I what I sent you. I know I said don't take the trade number one because the legs didn't make sense. And the downside was already kind of playing out through the week. So I put in a hypothetical trade. And what would that be? 127 by 113 for 350. All right, let's see what that's trading for. I'm just curious. So this was Amazon. And then we also did an equities on demand, some hypotheticals on Chevron, Phillips, 66, and ExxonMobil. So if we did a strangle, today's expiration, it was a 127 and a 113. And right now that's trading for $1.60, and it would cost $3.50 to take the trade. So super happy that I did not take that trade because that would have been a disappointing. I mean, even though it was a solid earnings, I mean, Amazon's fine. Look, I have a 120 long put. I didn't take profit on it. I should have, but I was like, you know what? If earnings are crap, I want to have that put for my protection. So I increased my cost basis by about $1. I don't really care. I'm going to go out another 30, 45 days just in case. But if we put in a decent bottom and Amazon with a larger market can rip on dollar weakness, then Amazon's probably coming back up to highs and off we go. So there's a lot of positions I could take on that, but I'm just going to keep buying puts, not to expect bearishness, but just to protect my butt because it's silly to let the market go against us and not be improving your cost basis. If you trade options, that is. Yeah, thanks, Gary. Dude, how'd you know that? How'd you know 133 by 1? Or that was the original one, right? Yeah. That was the original one that I did. The 133 by 119, that one's even worse because if you still held that one now, you had a chance to protect some decent profit. That would have been 133 by 119. Oh boy, yeah, that'd be rough. Oof. This was a $3.20 debit, I think, and I closed it out for 450 and change. And that was before earnings, but yeah, that would have been a rough strangle to hang on to now because you're sitting at pretty much max loss. Okay, but yeah, Scott had emailed me asking if it was too late to take the trade. I'm like, well, based on the movement, we already moved. I already closed out the trade. We already hit the weekly trading range, stuff like that. So anyway, this trade was nicely positive by like Wednesday, Thursday, where I was able to take like $1.20 credit. So all in all, pretty solid for the week. I think I took a screenshot. This was as of, let's see, here. Maybe I did. Oh, this is it. This is up. This was a screenshot from the 25th. So this was on Wednesday, and added a few more bucks into this. So I'm up like $2,000 for the last couple of weeks on a pretty small account. This is my like $35,000-$40,000 cash account. So it translates pretty well. And then just trading, everybody. That's it. Nothing to see here. So good, Gary. I like that. You want to take a look at DVN and NVDA? All right, DVN. This is energy. 46. Take a look at the higher time frame. I feel like you've asked me this one before. Well, this is what I will say. Right now, I'd say, I mean, I'm not sure what you're looking at positioning on this, but there's a decent amount of support, I would say, in this equal low. If we have a broader market rip, it will be interesting to see if this comes back up to highs. I'm not sure if something like DVN can only behave well with oil, but what's interesting is, oil had a 40% rally, and I don't see that anywhere in this stock, right? So, I mean, as far as the correlation to oil goes, it's not great considering its oil and gas production. I feel like there's probably better beta elsewhere, unless they're coming out with a huge dividend. 7.31 is pretty solid. I'm not going to lie. But could this also be high to low, some corrections in here? I will say this: if tech rips to the upside and that's the fastest recovery, oil and energy is probably going lower. And I just want you to be careful of these oil and energy plays because if oil is going to brace for a slowdown or bracing for recession, this is what oil does, right? Oil did this earlier until I don't even know why oil did make a rip. The whole question of are we in a recession, not in recession, none of that changed, right? But what did change is now we have a freaking conflict in the Middle East. So before that was happening, all this was oil bears pricing for recession. And then the market started to rip. Conflict started happening, supply issues, OPEC starting to cut, all these things happening for this rally to the yearly pivot. There is a line in the sand right here on oil if we hold that 200 EMA, but that's about it. Because if we come right back down to 75, maybe there's 75 to 95 support resistance, or this thing, like I said, I wouldn't be surprised if this is the high, this is the low. And we mentioned this many times this year that oil just finds a range to exist. A big supply and demand range wouldn't surprise me at all. So I would say be careful on overloading that portfolio with oil and gas because I don't know how great it's going to be. I think the biggest recovery is probably going to be the NASDAQ, to be honest. And I hate to say that, but it's like, man, you still have, I mean, look at earnings this week. Google, Meta, Amazon crushed earnings. And if the Fed puts in some type of language where the market wants to rip for the rest of the year, these stocks and these broader indexes will recover because of just everyone just putting money back into the markets. So if we see a lot of tech gains, we typically see oil and energy down. That's what's been interesting this year. It's been a lot of like strange but meaningful correlations. So, anywho, that's DVN. So I really don't have a good setup on it outside of keep an eye on it, but on the higher time frames, there's still room for it to drop. There's maybe a range trade in here. The weekly's back to the 200 EMA, which is meaningful, right? I mean, so we hold that level, that's good, but I would say if you're holding DVN, I would want to be protecting to the downside by a long ways, and this thing might reset to 30 to 20, who knows? But to not see the correlation with this and what oil did over the year from 65 to 95, this one I don't really like as much. Nvidia, I think the good times are over, and it is what it is. I mean, the timing of this would have been just shorted at $500. That would have been the easiest trade. Bear call spreads at $500. The problem that I saw was bear call spreads paid garbage. We were looking at selling with bear call spreads at a time where the premiums were not great, and I didn't take a single trade. We did a couple of staggers in here. When it first like gapped and broke, we're like, all right, we'll take a stab at it. I lost maybe $3 or $4 total on Nvidia because I was doing $5 spreads, collecting $2.50 to $3, and just didn't get the fills and didn't get the timing right. But I don't care. I mean, I think that the top is kind of in. If we have any type of rally on this one, it's going back to the same levels, but that's about it. I don't think that this company is going to be outgrowing. It's already sitting at like 29, 30x earnings. So I just don't see it getting higher. But that being said, it's all about how you price out the options. If it prices in poorly, I mean, this is still a big gap area as well. If you go to the daily time frame, you can see that gap. I also know this 10 o'clock, and I guess are wrapping the session up. But right in here, right? If all this does is come back and fill this gap, we could keep going down in Nvidia, and then I could see the buyers wanting to step back in and fill some of these levels here for range high. But if you could kind of essentially buy it on sale, 370 down to 300, I'd be looking for some type of turn, maybe off the 200 EMA, maybe take a couple of stabs at it and see if the broader market's up for the rest of the year. We'll see. Okay. All right. All right. It's 10:04. I'm going to switch over to the trading room. Equities on demand students, let's talk about maybe some simple stuff today. Maybe some credit spreads on Qs and SPY. I think the Fed. Again, I'm basing on the dollar. I have no idea what Jerome Powell is going to say. Probably nothing good. But I don't see them necessarily crushing the market any lower. I think the market's made a pretty good correction, and I don't know. I'm optimistic that we have something good for the rest of the year. But ownership wise, I still want to buy puts. I still want to be protecting. But I think that we can have a reasonable rally with a little holiday move. All earnings this season were pretty solid for the last couple of weeks, especially large mega cap tech. I mean, it was ridiculous. I mean, Amazon was like given like the moat category all over again, and they're talking about AI. It's like all these things that helped. This is why I liked Amazon so much going into this Q3 Q4 is because if Amazon just starts talking about AI, which is just one thing, but it's like what the heck moved the market all year? AI hype. So if Amazon starts to talk about it like it's a real thing, that gives this plenty of upside potential where, Meta already hit this level. Facebook already, or Meta and Microsoft already hit this level. And Google already hit this level, right? They already had their runs towards the all-time highs. But Amazon has all this upside. So that's what I'm saying. I like Amazon a lot. All right, I'll let you go for today in the YouTube session. I'll switch over to the trading rooms. If you do me a favor before you go, hit the thumbs up button, please. And do me a favor also, if you want to check out the video series, if interested, a couple things I'll be working on over the next couple weeks. My Trading 101 video series, my Keep It Serious and Simple video series. I'm going to add in, I found a bunch of title screens for my trading, my indicators A to Z. So the playlist that I think I have down here, it's over here somewhere. There it is, trading indicators A to Z. I'm going to try to add in like 20 to 30 videos here. If you have any requests, feel free to use the chat in these live sessions, or just send me a comment on one of the videos, and I'll build out some extra education. But this is the new stuff for this week. I put in some very simple, easy, conceptual options videos, which is just like, look, we trade this stuff all the time. This is an overview and an introduction. It's not going to give you trades. It's just I just feel like I can explain it a little bit easier than what most people do, and that's just because I did the same training a lot of you did, which is like, how do you trade options, and all this stuff is super confusing, and I hate it. So I want to make the learning curve as fast as possible. So if that helps, check out the videos. I'll be adding to the indicators, and just keep the live sessions running Mondays and Fridays. All right. No further questions. Awesome stuff. Thanks for being with me today. I'll let you go. Happy Friday. And Equities on Mansoons, I'll switch over and see you in a couple minutes. Okay. Thanks, everybody. And we'll be back on Monday, 9:30 a.m. for opening bell and a little kickoff for the week. It's going to be a big week with the Fed on Wednesday and non-farm payroll, if I believe, on Friday. Let's confirm that before we go. Next week, we wrap up the month on Tuesday. We have employment cost index for the U.S., consumer confidence, New Zealand employment. Wednesday, ADP, plus we have JOLTS job openings, PMI numbers, Fed funds rate expected to stay the same, and we're kicking off the new month. And then we have CAD and U.S. payroll or employment news. So that's quite the shotgun approach. And we also have a Bank of England rate decision, which is expected to pause at 5.25. So plenty of volatility next week. Should be good. And let's crush it. All right. Have a good weekend, everybody. I'll see you soon. Thanks. Bye.